So I'm watching the market today. I'm thinking about the old rap classic. Whoop, there it is, right? Although, listen, you never want to get overconfident as an investor. The action in the market and its leadership mix hints at a lot more room to the upside. Now, today, the NASDAQ Composite joined the Russell 2000 in the all-time high category, powered by those household tech names we talk about all the time. Market breadth extremely bullish. The combined New York Stock Exchange and NASDAQ saw 416 new highs, only 71 new 52-week lows. Although tech is going to grab all the headlines because of these billion-dollar mergers and new record highs, consumer stocks still killing it with the stealth rally that I've been pointing out for many, many weeks. Even consumer discretionary winners like Amazon and Netflix didn't have the percentage gains today that we saw with Under Armour, Target, Ulta Beauty, Kohl's. Now, I love investments based on technology. I love the consumer and also the thought of rebuilding of America. And I also have some breaking news. After the bell, Twitter, the social media giant, added to the S&P 500 on June 7th, and Netflix will be added to the S&P 100. Now let's get a feeling from our guests and what they're hot on. Lindsey Bell, CFRA Research investment strategist. David Dietze is back with us as well. All right, Lindsey, what do you make, first of all, the stealthy nature now of this sort of rebound in the market? Because the headlines are all fear, right? Trade wars, this indictment. So it really isn't getting a lot of coverage. I kind of like the fact that it's not getting a lot of coverage right now.
I do too. On Friday and today, we kind of got back to the fundamentals of the economy here in the U.S. A great jobs report, a great ISM manufacturing report on Friday as well. And then back today, the trade talks, even the G7 noise really didn't affect the market. And tech took leadership. And Twitter joining the S&P 500, come on.
I got to tell you, it's been a heck of a week, a month rather, for Jack Dorsey. Twitter's made one heck of a rebound. But these inclusions, it rubber stamps these names, I guess, with the bigger money hedge fund guys and money market guys. But the rally in of itself, David, the only thing that discourages me as the individual investor, I think, still perhaps missing out. Something I went over before I came up to the studio. Bullishness is extraordinarily low.
Yeah, absolutely. I think a lot of investors are still afraid of valuations. They've seen a lot of stocks kind of get away from them now. But I'm pointing out to them that basically we're still in a low interest rate environment. So what I'm steering people towards are like world-class names, but not the ones in the news every day. And looking for sectors that have not quite participated over the last couple of years. Two sectors I really like: energy and also consumer products type things. And the two names I would go for, Procter & Gamble and Exxon. Procter & Gamble's down 20% so far this year, but they have great exposure to the global growth story. 60% of their sales are coming from overseas.
Earlier in the session, right before the close, consumer staples were the #1 performing S&P sector, to your point. So they are definitely coming on, and you saw the Procter & Gamble kind of names and the General Mills and those kind of things. What would propel them outside of being oversold, or is that enough? It's just that they're oversold and they'll start to drift back higher.
It's always hard to pick one catalyst, but one I like is the fact that we've seen some quaking in Europe due to the Italy and so forth. And that's going to give some pause to what the Federal Reserve might do this year in terms of cranking interest rates. And these are solid dividend-paying stocks. If people feel that bonds aren't going to get away from them, then I think they'll come back into the dividend plays. That will give people the confidence to get back in.
Of course, ExxonMobil has a very healthy dividend. For you, technology. When people do read about the market, that's what they're going to read about it. But is there more to this than that?
Yeah, no, we like energy as well, too. And, we saw oil prices come down from above $70 a barrel. But we still think that the prices that they're at today was like $65. That's still very good for a lot of these producers, and that they should do well. And I think once Iran and Venezuela really plays out, it's going to stabilize the market. We're going into the strong driving season.
Right. What about the talk, though, that Russia and Saudi Arabia and OPEC may increase production? We had 3 more oil wells come online for, last week. Just the idea, again, this whole balance that's always the game of energy, that maybe supply now is starting to get too heavy.
Well, yeah, it's always a supply and demand issue with energy, and we just think that has been priced into the market for the most part now. We'll see what happens at their July meeting, but we feel comfortable with energy here.
All right, thank you both very, very much. Appreciate it.